Hello all. Right now I'm just doing some random shit. Just kind of recording, just having pen to paper and just doing some random stuff. None of this is scripted, and I'm just doing this off the cuff because I'm really kind of bored and this is kind of recording my journey and just kind of throwing it out there. Right now, I got these three counts. This is my Charles Schwab, and I usually just filter out my trades based on each fund. And right now, I'm just gonna go in depth into my Fortress fund. This one is where I make most of my day trades and most of my options hedging for the market. And yeah, just putting it out there and just really putting voice to paper right now. I'm gonna go in depth into my portfolio, and these are the positions I have right now. Currently, I only have these few positions, and the rest of it is in cash. Right now, I have around 77,000 in SWVXX. Mainly just using this as collateral for when I sell cash secured puts for monthly income. Is using it as a hedge for other certain market conditions, but I like to have my cash equivalent in SWVXX because it usually just gives out daily interest to I think around 4%. But these are the current positions I have right now. Coca-Cola is always a really good company to have. I have around 200 shares. Large dividend portfolio for that one, and usually I just sell short calls on it for monthly income. If it does go above $69, I really love for them to just take it. It gets cash in my pocket, and it's something that I use as a hedge in case Coca-Cola does go down, and I can just double dip in dividends and short call positions. So if it gets whisked away at 69, then I'll be happy. And 69 is also a great number to have, I suppose. Envis. Nebius is really good. It's my exposure to the AI bubble, I suppose. Nebius is similar to CoreWeave in that way, but has a lot less depth in his portfolio right now. And yeah, Nebius is a really good play for me. I really anticipate it going higher because it's Microsoft deal, and hopefully down in the future I have other deals with other companies as well. Compared to CoreWeave, they have a lot less debt, and with this whole environment that we're in, interest rates going down, I think Nebius is posed for higher growth in the future. And that's why I have 100 share position to that. It's something that I'm looking forward to, and we'll be selling short calls on that one just in case short-term volatility hits. And right now Nebius has really high implied volatility, so you can get some really rich premiums from that one. Webull is kind of fucking me in the ass right now. I have around 500 shares for around $14,000. Webull is not doing great right now, but right now I'm just selling short calls on it to kind of hedge, and it's more in the future, but it's something that is really hitting the portfolio pretty hard. But right now I'm just selling short calls and generating income from that one. Bank of America is pretty good. Their last earnings was really good, and this whole scare about local bank liquidity has been kind of exacerbated. So I put 100 shares into Bank of America, and again selling short calls on that one. Bank of America is really good for long term. They also give dividends, but the volatility on that one is also pretty low. So I'm using Bank of America mostly as a hedge to the greater market. I do have $77,000 cash, so if any good news does come out in the next earnings releases coming up, then I'll be ready for double dipping into that sector. Bank of America, pretty good hedge, and it's gonna be something to keep down the line. Philip Morris is okay. I was there earlier in the year, early 2025. It was doing really good. It ripped up, but for now, Philip Morris is taking a hit. Its growth in non-smokables is kind of waning, and right now I'm just using it again as a hedge to the greater tech market. Every time tech goes down, Philip Morris seems to be going up, and Philip Morris does have pretty good exposure. Their incomes are going up, but right now analysts are kind of projecting it to grow less, and that's why the stock has been getting hit. But right now I got some long leaps on that one. I'm totally happy with it going down, but right now I'm thinking about this hedging my Philip Morris position with more long leap calls in the short side. Yeah, Philip Morris has been a little weak lately, but I still think it's in a good position to grow. And considering its weakness for the past 3 or 4 months, I think it's pretty decent play, but I'm sitting on my hands for that one and just waiting for better information. United Health, United Health has been really good this year. Has been taking a beating, but after the whole fiasco with the healthcare sector and the whole scare with its Medicaid, Medicare, I think UNH is really good down the line. It's starting the same vein as Geico, where they have insurance, they get premiums, and I think UNH is a really good price for what it's offering. And right now, I think in the future it'll be really good. And I have some leak calls on that one, and it's been printing cash pretty well. I've also been selling short calls on that one again as a hedge and for monthly or weekly income on my side. A large part of my portfolio is also into VU. I use VU as collateral as well for other options positions. If I were to be really interested in a cash secured put position, I have around $31,000 in VU. VU is really, really good. It's my exposure to the greater market, and I like to use it as a hedge for other, well, not really a hedge, but I use it as a collateral for other situations that really, if I really needed the cash, I use it as collateral to sell short calls, short puts for certain companies. And I've been generating some really good returns for selling short puts in this market right now. The whole market's going up, and short puts have been generating me a lot of income for the past year or so. That's the Fortress Fund right now. Lately, I've been day trading and been kind of hedging against the recent falls in the tech sector. For this current month of October, been doing a lot of day trading, just kind of hedging and kind of shorting AMD. AMD has been ripping a lot lately, but for the past couple of days, I've been shorting and then just making short scalps to kind of protect the greater portfolio from any large swings. AMD has been really volatile since the OpenAI deal. And it's been really interesting. Implied volatility has been going up, so I've been selling a lot of AMD call options. People are kind of obsessed about it, so I've been selling a lot of call options, and the premiums have been really good. But as a caveat, I do not hold overnight. AMD has been really crazy. I believe on Tuesday, October 16th, or was it 14th, it gapped up like 9% in a single day. So I wouldn't recommend holding AMD call options overnight. Overnight exposure is a little too high for my appetite. But for past October's been mostly day trading. Been getting around $9,000 in trading income. This is just the start. Just kind of just giving the general overview of the Fortress Fund. This is pretty much the extent of my profile. Just throwing it out there. Just kind of getting myself exposed to this, and kind of hoping to make more videos like this in the future. And see you later.